I would say he's probably wrong on the 50 basis points in a couple of weeks. I think it's been really clear from all of the comments from the Fed governors over the last couple of weeks that they know they have to remain strong and steadfast. And I think you're seeing it today. You're seeing it. Jim made a great comment. You know, the response to this is that good news is good news. But it also keeps the Fed on the path that they've outlined. And I think that if the Fed were to pull back on a 75 basis point rate hike in the next couple of weeks, I think what that would be taken from, as the market would take that, was that they would take that as, wow, the economy really is slowing much faster than we expected. And we are actually looking for not a soft landing, but a very hard landing and perhaps a more protracted recession. So I actually think the Fed needs to go through with 75. I'm not sure about, from there, where do we go? I couldn't agree with Jim more on the PPI. That is the most important number now because we're looking at wage growth that's actually starting to trend lower on a nominal basis. We're starting to see, even though jobs are continuing to be created and we're seeing continued unemployment at 3.6, we're seeing that wage growth, which is the sticky part of inflation, as we talked about yesterday on Overtime. That's the part that is going to affect margins in the back half of the year. I would say, if we look at, and this is the, from Kevin's perspective, I see the optimism because, if you're going out 12, 18, 24 months, stocks probably make a lot of sense. And of course, we're in them. But I think most importantly, we're entering a new phase. This is not the post-pandemic phase. This is the new growth phase. All of those areas where we're talking about supply chain dislocations, you know how we're going to rectify those? We're going to invest. We're going to make capital expenditure here in the United States. So I think where you go over the next 12 to 18 months is just as important as your view on what GDP is going to be, because the economy here in the United States is not going to go back to where we were in 2019. It's going to look different. And I think that's an important point.
I know why O'Leary's all bulled up. He spends too many nights at Carbone in Miami, spending $30 on spicy pasta, the rigatoni vodka. I know, O'Leary. So you're getting maybe an interesting perspective on where things truly stand. However, Jim Lebenthal.
Sir.
Piper Sandler, our view is too early to call the recent rally more than just a relief rally. You could say it's a soft landing and still think that stocks are going lower because the Fed is still going to be aggressive and you're still going to get, even as you think, hot inflation prints like next week's Wednesday's CPI. They suggest you could go down to 3,500 followed by a second half rally.
And if I'm not mistaken, because I get Piper Sandler research, I think their year-end target is 47.75.
It is.
Yeah.
That's below yours.
Not by much. I mean, mine's 48.96. I mean, I'd be happy at 47.75. I realize I look like I'm on an island. Let me give you the short and the long.
Well, you're with O'Leary on the same island.
I like being on the island with him. I agree with him. I think
unless it's Fantasy Island. You guys are on Fantasy Island.
That was a good line. That was a good line. Look, what Kevin is trying to say, I think, and what I'm definitely saying I know, is that when you look into 2023 and beyond, you've got another after effect from this pandemic beyond inflation, which should be cured. That after effect is supply chain onshoring. The world does not want to import its materials and its commodities and its products from overseas. Just doesn't want to do it anymore. That's why we're building semiconductor plants and automobile plants and lithium mines here in the U.S. That's a strong economic factor in 2023 and beyond. And that's why I actually think, and this is to Piper Sandler or myself, yes, we've got some near-term issues right now with inflation and the Fed, but inflation should be well on the way down in a couple of months. That gives the Fed room to pivot. I don't think 50 basis points. They've got cover to do 75 basis points at the end of the month. They're going to take it. But after that, they can back off if inflation is coming down, and that's where a bear market rally turns into a secular one.